One of the ways to ease profitability in the market is by trading in the direction of the trend. And to follow the trend, we need various types of pattern. In this video, we'll be considering flag pattern. And there are basically two types of flag pattern, the bullish and the bearish flag pattern. So flag pattern are continuation pattern. So flag pattern signals that price will continue after a major or minor consolidation in the direction of the trend. So for instance, looking at my chart, you can see that price has been going bearish. This is GBP USD, and price has been on a bearish trend. When you look at the market, you can see the movement of the market to the downside. So this is a bearish price movement, and when we spot this, all we need to do is to continue in the direction of the trend. So one of those signals that help us to follow up with this trend is a flag pattern. And in this video, we are looking at the two types of flag pattern, the bullish and the bearish flag pattern. So in a typical scenario, when we talk about a bullish flag pattern, it's a scenario whereby price is moving, then price begin to move. It will continue and come like this. So this is what we refer to as a flag pattern. So when you connect your trend line, see now, to each of these, you realize that this particular scenario is looking more like a flag. So from here to here, when you look at it very well, this looks like a flag. And here we have another flag. So this is how a bullish flag patterns look like. In a bearish flag pattern, you realize that price came down, and as price came down, you see price move to the upside to come down again, to move this way, come down again. So when you connect this, you realize that this is your bearish flag pattern. So this is exactly how a bearish flag patterns look like. And when you separate this particular, you see that it will look more like a flag. So let's go to the chart and see exactly how this look like. Now you can find this more on a lower time frame. These are often represented clearly on a lower time frame. This is H1. You can see that this price has been bearish. So for instance, if we have our trend line drawn to this trade, so this is our trend line connected since the beginning of this move. So you can see that at every interval, price keep leaving our trend line, and here we have it. So in this scenario, this is a bearish flag pattern. So you can see how price make a minor retracement as a flag. When it get to the trend line and the moving average is break out with a bearish candlestick pattern, which is this. So you will now sell from here and your stop loss is above. Here we have another one. So this bearish flag pattern are continuation signal. You can see this could be a minor or a major retracement. And afterwards, all you need to do is to wait for price to break out of it. So you can see this, see how the price range into the trend line and the moving average, and then was rejected. It break out of it, pull back to retest it a little, and then it continue to the downside. So this is how it works, including this very one. This is a chart pattern. This looks more like a major retracement. So we say it can be a major or a minor retracement, and afterward price continue. So you can see many a times this is formed to fill in an improper price action or to mitigate a fair value gap. And here we have this actually fill in a fair value gap, and then it continue to the downside. So this is how simple you can take advantage of this candlestick signal, this chart pattern. So you can see all of this. Immediately price, this is volatility 75, and this is a bearish flag pattern. So price pull back into the moving average and continue its movement to the original direction. So this can be accurately combined with our commodity channel indicator. And look at it. When this pattern begin to form, price was here. Can see that? And then this pattern formed from here now into the 90 and 80 level of our commodity channel index, which is here. And look at it here. So from that zone, we'll now begin to look for a reversal signal. And look at, we have this rejection inside of this place. You can see those candlestick formations that are formed in that zone, and price move straight away to the downside. The same scenario happens here. Price almost at this level of 80, and look at this. So this is a bearish flag pattern. And of course, here now price is bullish, and here we have a bullish flag pattern. Here is a bullish flag pattern. Can see that. So if I connect the flag, this is how it will look like. You can see how perfect it looks. Then all you need to do is for you to wait for price to break out of that zone. You can see the price break out of it, retest, spike to the upside, and it continue. So these patterns are pretty much simple and can be traded in the direction of the trend. So these are continuation pattern, and you can see how they placed out. So that is it. I don't intend this video to be long, and I believe you have learned something new. Do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you.